Sunday, Sunday, Sunday. Oh, wait a second. This video is for Monday. Happy June, everybody. First trading day of June. Oh no, guys, double top. Everybody, I'm here. That's all I'm hearing on X is, oh no, we got to worry. Is this a double top similar to 2021? And the funny thing about it is that I had this on my radar months ago, and I was even calling for a double top. Watch my exit strategy video part 3 on TikTok. It's pinned on my profile. If you watch that, we are right now in a place where everything in that video has come to fruition. And yet I'm sitting here and my eyes are on crypto and my eyes are definitely on the stock market. And I am not exiting yet, not yet at least, because I just want to wait and see how things go. I am not a person who exits on the peaks. That is my strategy from day one, not day one, from all of 2024 and 2025. I don't exit peaks, I exit near the peak. I like doing that. I don't buy bottoms, I buy near the bottom. And so double top, we're hearing that all over X. Let's see what we have from Max Price here, someone you should definitely be following. What everyone thinks is the same situation is vastly different and won't end in the same outcome. You see this chart. I have this chart on my trading view. I've shared this chart, this 5-point peak dating back to 2017, the 2017 peak, this 5-point trend line dating back all the way to 2017, the 2017 peak. Boom, 2 times in 2021. Boom, 2024, 2025, and here we are again. So why are we going to break through the peak this time? Well, this is what this looks like for M1, M2. Bitcoin priced in M1 and M2. I talked about it on my live stream. I think it was 2 weeks ago with Devin, which you can see on X. You can't see that on YouTube. I make it for members only on YouTube, but you can see that on X. I talked about 113 being resistance. Okay, we got to 112 and change, but 113 being heavy resistance. But look at what this looks like when you factor in M1, M2, which you want to pay attention to those M1, M2 charts, right? You want to see all those charts floating around X, talking about Bitcoin and M2 and the forward leading indicator on M2. This is a compelling argument to be made that this is what we should be paying attention to, that the breakout already happened, and it's been a very low excitement breakout. So do I believe this? We'll see. This is compelling. That's the reason why I'm sharing it. Not because I'm all in 100%. I believe it. I just think it's a compelling argument to be made that this is what we should be looking at. Moving on. Guys, I don't have a lot of crypto stuff in this video. Watch my yesterday video. I talk entirely about Bitcoin in that video. There's some things I want to talk about in this video. And by the way, hit up the like button, subscribe to the channel, leave a comment in the comment section for the algorithm. But there's some of you asked me about some of those dividend yielding ETFs, those financial instruments that I bought into that I'm really excited about. So I have some recommendations for that. And I actually want to talk about housing in this video as well, because the canary's chirping, or the canary's passing out, I should say, in the coal mine, but we still have some time. So Justin Bennett, double top, here's the big thing. Another thing, 2021, I already talked about that. But this is the part where everyone gets super bearish, expecting a 2021 style macro top. It's also probably where overly aggressive shorts get wrecked. The run-up isn't even close to the same. Correct. Oh my goodness, correct. Super exciting peaks in 2021. Exciting peak in 2024, not quite on election day, and very unexciting peak in May of 2025. So the backdrop couldn't be more different. I doubt they will make it this easy. Oh man, if it was this easy, I'd be shorting heavily. Of course, I could be wrong. The message is the same either way. Don't get ahead of yourself. Trade it one level at a time. I'm seeing all these calls for the double peak similar to 2021, which makes me want to think a little bit differently. Zig when the market's zagging. A meme for you guys. What if 112 was the double top like the cycle top in 2021? Do you notice anything about this meme? He's wearing his McDonald's shirt, which that's what the dumb people are calling for, the dumb money. We'll see. We'll see. Maybe they're right. Maybe they're right. Hey, you know what? Dumb Money bought a lot of stocks in and around April 7th, and they ended up being right. So maybe this is the way. This is the way. But I really like the sentiment of this tweet. Now, this is about the stock market. This is from Income Sharks. He says this: shorts are piling up. Timeline bearish on stocks again. People hyper-focused on headlines. Is that true? Oh, yes. And meanwhile, stocks are going to irrationally keep going higher. Here's what I like about this tweet. It's one word: irrationally. Guys, it doesn't make sense for the stock market to go higher. I have shared with you on a larger scale a great deal of information, of data that would confirm that the stock market, crypto, should be dumping super hard. Super, super hard. And yet, the market can get irrational at times, and I would not be shocked at all if we had another 1999 type run ahead of us in the stock market, which means that I'm not throwing in the towel on crypto, not yet at least, and we'll see where we go from here. Man, irrationally keep going higher. That is, there's something about that sentiment right there that perfectly describes how I would feel if we're going to continue to rally from here. Moving on. So dividends. Here's someone to follow, devoted dividend investor. He's somebody that I've followed his cues a lot. And there are a couple tickers here that I just scrolling on his account. Today's buys completed, 2 shares of OMA, 1 of QQQI, 1 of WEEK, QVDO, BTCI, BITY. I have OMA. I have QQQI. I don't know anything about those two. I have BTCI. That's a Bitcoin covered call strategy ETF. You don't know what I'm talking about, don't worry about it. If you do know, you know exactly what I'm talking about. JEPQ is my largest holding, and the yields are about somewhere between 12 and 15% in dividends. This is an ETF that covers a lot of different stocks. It's a mechanism tool. It's a way that I try to do some covered calls, some stock selling, not some stock selling, some option selling, and this does option selling for me from people who know better than I do. And then my second biggest holding is SCHD. Monthly reminder, everyone, why SCHD is the best dividend ETF. It solves almost everything most dividend investors want. No capped upside, huge dividend growth, long track record, cheap to own. Yeah, it's about somewhere between $20 and $30 per share. Strong methodology, great diversification, lots of upside growth, tax friendly, sleep well at night ETF. MSTY, I have some of that, but I'm probably not going to have it forever. As long as crypto is going the way it is, we're going to be trending up. I'll be holding on to my MSTY. This one pays out insane dividends, like it's over 100%, which should communicate to you something. There's no way. If this went down 20% in a given year, paying out 100% dividends, that would be insane. This is a MicroStrategy options trading ETF. People get really excited about it. 100% plus dividends. I want to believe, guys, But there are people who are all in on that ETF. I have some of that. Moving on, here's some other ones. Some Round Hill ETF weekly pay distribution ones. So Round Hill NVIDIA weekly pay ETF, covered calls, option strategy. They pay out their dividends in terms of the yields that they get from selling covered calls. Same deal, Tesla, Apple, Coinbase, Palantir. I have the Palantir one. I have the Coinbase one. I have one of those other ones. I think it's NVIDIA. I don't have all 4 of them, or all 5 of them, excuse me. But they're worth looking into. These are weekly dividends. For me on Robinhood, these dividends get distributed. They rebuy shares, and I like it that way. The compounding ability of that. So these prices, the price of the stocks are around $50, $40 to $50. So 30 cents per share weekly. Let's just say that's normal. It fluctuates. But 30 cents per share weekly, after 10 weeks, that's $3. After 50 weeks, that's $15. That's a decent percentage return. So the compounding effects as I buy more shares for my dividends, that sounds exciting to me. But moving on, this is incredible. Bravos research. Just 2 months ago, there was a 95% chance of rate cuts in 2025. Today, that number has dropped to 76%. The economy is still in a higher for longer stage. Do I agree with that? I don't know. That it's in a higher for longer stage. Because I've talked about the bond market crisis. Why would the Fed cut rates when they can't control the bond market? That's kind of a scary thing to me. They need to get control of the bond market, and then they'll cut rates. But if I'm wrong about that and Bravos research is right, then we are in a 1995 or 1998 scenario where, okay, we'll have an irrational pump like we saw from income sharks there. An irrational move higher in the stock market and in crypto. And then we'll see what happens after that, So is this a good thing that the chances of a rate cut in 2025 are going down? Time will tell. So housing. Very interesting stuff on housing and very compelling stuff here. So Crypto Beast here, do not buy a house unless you are a billionaire. Rent for now. Wait for the 2026 housing market collapse to buy your first house. You will thank me later. Now, 2026, we'll see. But there are signs that that this housing market is weakening big time. And I'm going to share with you some of those things. Like you can see, okay, 2025 bubble, the 2006 bubble was irrational. It was, let's buy a house and flip it for $100,000 a month later, kind of irrational. I'm exaggerating a little bit. The 2025 bubble, I would not as much call it a bubble as a, interest rates were super low during COVID. And now people, what do I say? There's a big gap between buyers and sellers right now. And I think that has to do with COVID. And you can see here, or another thing from Darth Powell. Wait, was that Darth Powell? No. A thing from Darth Powell. Should I buy this $1.9 million house for a $13,000 a month mortgage or rent it for $4,800 a month? No, this is not a joke. Going back to that previous tweet about rent and don't buy, this is wild. And here's how something like this can happen. This house, I would assume, was bought a while ago and has low mortgage payments with a very low interest rate. And so they can rent it out for $4,800 a month and actually make a profit. But the idea that they're going to sell it and the person who's buying it is going to pay $1.9 million and pay $13,000 a month on their mortgage because interest rates are so high. That's reality right now. That's what we're facing. And where do we go from here? Well, let's keep going here. Let me show you this chart first from Bar Chart. There are nearly 500,000 more sellers than buyers. When was the last time this happened? Late 2014, early 2015. It wasn't this bad, but there are more sellers than buyers. It just is. And let's see what you got to follow this account, guys. The Market Sniper. Now they're very bearish on short term, whatever, but long term, medium term, I should say. I don't know, a year, 2 years, something like that. So perfect storm, ingredients for property prices, rising rates, debt asset class being downgraded, high risk of sovereign debt default, unwillingness of banks to lend, higher underwriting standards due to credit market outlook, overexposure of loan books to poor quality and credit in cars, homes, and student loans, recession, worsening economic outlook from a growth perspective, tariff wars, uncertainty on tariffs, and associated inflationary effect on prices, inverted demographic of home owners, boomers, fading Airbnb returns, ouch, awaiting a potential unemployment surge as layoffs climb, AI and robotics reducing high redundancy employment, record high property unaffordability, rates times X bank margin, X prices, X default risk. The average age of buyer, 57 years, ouch. Previously been 31, unaffordable for smaller generations below boomers. What did I miss? Something else from the Market Sniper, well, they retweeted this. Just a very practical thing to just keep in mind here. Realtors are turning down listings. Have you ever heard that before? Why? Because they're working for free, essentially. Sellers still think it's 2021, but offers aren't coming in. Deals collapse, hours wasted, money lost. Even agents are walking away now. This isn't a cool down, it's a breakdown. So here's the point. Here's the thing from this. Would they turn down just any listing? No. But what they're turning down is listings from people who want to get 100 offers above asking price. Those days are gone. We're seeing, 500,000 more sellers than buyers in the United States. Those days are gone. This is more of a buyer's market, but buyers don't want to buy because prices are still super highly inflated. So where do we go from here? Seems like a compelling argument. At some point, there's going to be a dump. But let's go back to income sharks here. Stocks are going to irrationally keep going higher. Maybe. What a world we live in. Maybe. Another thing down the pipeline that what are we going to see here? I'm not going to worry about this yet, not even close, but this is why the United States stock market has been roaring. A reason why is just access to stock investing around the world has gone up significantly. And we have here the 7.5 trillion problem no one is talking about. Asian countries are quietly reversing 30 years of investment in U.S. assets. What happens when the world's biggest buyers of U.S. debt and stocks start pulling out? You can certainly see that with China. It's different for each country, but China is definitely gone down. And what else? I mean, it's either, to me, this looks like it's more like flatlining. So where are we getting more injections of capital? Maybe some other countries around the world, in the United States at least. So I wouldn't say that's a dark video. It's more of a, guys, I hope we're on the same page. We've got some difficulty to work through. My friend Devin, he says 2029. Maybe it's 2029. I don't know. That seems too far out. But things move slower than we tend to think. But anyway, I'd love to hear your thoughts in the comment section. That's all I have for today. I hope you have a wonderful start to your week, a wonderful rest of your week. I'll see you in another video.